Resource Generation itself as a company has a good support base in the Australian investment community, mainly revolves around the management and our previous experience and the credibility we've built up over the years of doing exactly what we're doing here, which is really developing major coal mines. I guess what's unique to this dual listing though is that our major asset is now here in South Africa. So funding the principal development of that asset will occur in about 12 months' time, hopefully, which is the project finance and in conjunction with that some of the equity funding, right, that would go about bringing to a project financing package for the initial mine construction and development. Now in doing that, of course, we'd like to see, within the consortium of banks, obviously the large South African banks, they particularly have a preference to see it listed on the JSE for obvious reasons, but I guess also it opens up the door to investment by South African investors in an asset or a major project which has a big future in their own country. So from that point of view, we're very buoyed by the fact that we've done the dual listing. It's successful. It gives us the opportunity now to go across two particular markets where we hope that we find a lot of support. And what we'd like the market to do is watch us, observe our success as we go through achieving certain hurdles, and then we believe that value will follow those achievements. We've defined the resource over the last 18 months. We've completed our social and labour plans. We lodged our mining rights application in February this year. We're just on the verge of going through our public consultation process and lodging our environmental management plan. So we're hoping to secure a mining right, hopefully sometime early calendar 2011. That's our we believe realistic target. And if we can secure it in, say, the first quarter of 2011, we'd like to have, I guess, the project funding at a point of development that crystallises around about the same time. That being the case, then we could sort of set about construction of the mine, say mid-2011. We've given ourselves an 18-month to 24-month construction time frame to build the mine, and then hopefully first coal will be coming out of the mine, or first product coal will be coming out of the mine sometime early to mid-2013. We've adopted an approach which sees the mine constructed in two phases, phase 1 and phase 2. We have a very large resource, and it's a very shallow overburden resource, so it's actually quite a cheap operating mine. So a very small fleet of equipment can produce a very large volume of product. So it's very cheap, but also can produce that volume. We're holding back on going to the capacity that we could develop in the first instance to limit the upfront capital expenditure. At the moment, we've got a budget of about 4.5 billion rand in mind, and in that we hope to develop a project funding which would be sort of 60% debt and about 40% equity. So clearly, yes, we would be going back to the equity markets in conjunction with crystallising the project funding arrangements. And that's really phase 1. So that would get the mine to produce around about 12 million run-of-mine tonnes a year, and that comes into equivalent of about 6 million tonnes of product coal, 3 million of which would be designated for the export thermal coal market and 3 million for the domestic market.